Well, here we are. Welcome again. Hello, everybody. Hope you're fine. We are going to start with this new webinar today. Okay. As you know, I'm performing since the beginning of the year a small series of webinars regarding all involved in trading, meaning the use of indicator, figures, determining supports and resistance, and following with indicators and the oscillators. I'll come to Bollinger Bands today, and the fact is that maybe I don't know what do you think, but for me it's just maybe not the best indicator, because one thing is to watch in the past how the indicator develops, and the other thing is what's going on today with the same indicator. I guess that happens with all indicators, right? The issue that one thing is reading the past and one thing is reading the actual movement or stuff, right? So I found out that filtering Bollinger Bands with relative strength index seems a quite good method of trading, right? That's why I decided to explain both indicators along, okay? We are going to see how Bollinger Bands are supposed to work, what they technically mean, and besides that, how to filter them with the relative strength index. As I always told you, it's not the system, it's not the indicator we use, but the system we use about the indicators we choose to trade, right? I do believe most of the indicators we have available are quite accurate and all have their small secrets, sort of picking that help us trading and gave us signals. It's just finding the best combination, the most accurate for our trading style, and besides that, getting used to the indicator's behavior for a certain pain in a certain time frame. As I always told you, an indicator that works fine maybe for GBP dollar in 4-hour charts does not work in the same way in a smaller time frame or in different or bigger one or in a different pair, right? So the idea is to find the best indicator for a certain pair, for a certain time frame, okay, and get used to watch it and see the behavior of the indicator, of the price regarding the indicator. And once you learn that kind of behavior, you will be able to use practically any indicator you choose, okay, to trade. As I believe the most common ones like these ones, or CCI, or I don't know, MACD, or momentum, all the classical ones, stochastic oscillators, are all more or less the same value, right? It's just the way we use them and combine them that give us the best or the worst trading performance. There is where we must pay attention. So, starting now with what Bollinger Bands are, right? These bands were developed by John Bollinger. And these bands allow us to compare the volatility and relative price levels over a period of time, okay? And then these bands kind of envelop or a channel, a dynamic channel that surrounds price in the chart, and they are plotted with two standard deviations away from a simple moving average, okay? The medium line is a simple moving average, in this case of 20 periods, okay? We can use a 10-day moving average for short-term trading, 20 days for our charts or 1 hour, or even 50 days simple moving average in the middle for longer-term trades, right? That's at least what Mr. Bollinger suggests. Anyway, to this moving average, Mr. Bollinger add a standard deviation of 2, okay? If you take a look, here you have the deviations, right? 2. Also, we can change this deviation to 1, 1.5, or so, but the idea is that the standard setting 20 and 2 is accurate to trade in 4-hour charts, so we are going to leave the ones where they are, right? And we know that these bands don't generate buy and sell signals alone, right? Because the idea is that the price should hover between these dynamic channel, yet reaching the upper side in this case, okay, in the case we are looking at, could mean both a rebound to the downside or a clear break and acceleration of the trend. If we take a look at the past, right here probably, okay, we have a break, okay, and the price accelerate to the upside. So we have no clear signal of reversal, no entry point in the round of the roof of the band, right? That's not an entry signal, right? We have these kind of cases when markets moving sideways, okay? But once the price reach the top or the downside of the bands, you don't know if it's going to rebound like it actually happened here, or it's going to break and accelerate and continue, right? So the rebound in the top of the low of the bands does not mean a buy or sell signals all alone. Well, that's why we should use these bands with another indicator, and that's why I suggest to filter with relative strength index, as we are going to talk right now. This is because when price touches one of the bands, as I was telling you, could indicate a continuation of the trend like we saw here, right? So when we combine it with relative strength index, they become a bit more powerful. We know that relative strength index is a good indicator that respects quite fine the overbought and oversold conditions in the pair, right? When price touches the upper band, generally speaking, right? When price touches the upper band, okay, and we have the relative strength indices showing as it's above 70, we have, when we saw the pair touching the upper band and the relative strength index is under 70, there are chances of a continuation in the trend. Possibly, if the relative strength index is between 70 and 80, we have then chances of a correction, right? And this is the worst example, see, as the pair, okay, here we are. Okay, here we are. Okay, sorry. Let me approach it better. Okay, here we are. Sorry. This is one of the examples I want to show you. Okay, I mark both the 70 and the 80 level as GBP tends to move closer to 80 to consider it oversold, overbought, sorry, and 20 to consider it oversold, right? Overbought around 80, oversold around 20. I leave the 30 and the 70 levels because those are the levels I use with other pairs, right? You know what I mean? I have the template set this way, and for GBP, better consider 80 and 20, not 70 and 30. Okay, so see what happened here, okay? The pair accelerates, in this case, breaks the upper band, reached the upper band, yet relative strength index at this point was around 67, okay? This means price is not ready to turn and doesn't mean I should sell. But see what happens here when the price reaches 80 level, right? When the price reaches 80 level, the correction, sorry, that appears that nasty interruption. Okay, in here, pair in fact do rebound to the downside and give us around 200 pips a rally, okay? That's why filtering with this indicator helps us to avoid getting into a rebound when the pair in fact is accelerating the trend, okay? The same goes to the downside, okay? As the pair is quite bullish, we have no clear signals there, but see what happens here, okay? The pair reached the lower band, okay, and we are between 20 and 30. We are close to oversold conditions, okay, and we have a candle opening inside the Bollinger Bands, okay, suggesting us a probably upside correction, right? I usually avoid to plot more than 2 indicators in the same chart, okay? If we are using this combination, we shouldn't add any further indicator for the chart, as we are going to have mixed signals coming from the third indicators. Well, there are many ways to use these Bollinger Bands. We have a few rules that we should remind to trade them practically and efficiently. As they provide us a definition of a high and the lows, these relative definitions can be used to compare price action and indicator action to arrive rigorous buy and sell decisions. Okay, appropriate volatility and trend have already been deployed in these Bollinger Bands, so they are used for confirmation of price actions. It's not recommended. We shouldn't add nothing to confirm us or mix our interpretation of volatility, right? The indicators we use when we combine this kind of systems for trading should not be directly related one to another, okay? We couldn't use two momentum indicator, but maybe one momentum indicator and like relative strength index and one volume indicator that like Bollinger Bands should do the fact, okay? Don't use two indicators of the same that tell you the same information. Don't use momentum and relative strength indices both at the same time in the same chart, okay? For example, to as a signal, right? As a signal to enter in the market, okay? The idea of Bollinger Bands also is that once the pair rebounds or give us an entry signal both in the upper or in the lower band, the probable tag will be the medium band, right? Okay, that's the probable tag. But this is just that, a probable tag, right? Not a written truth. That's not a real thing. It's a probable objective price. So what's the best thing we can do when we plot systems like this? Well, the idea is to backtest them, right? We have plenty of cases that the pair reach the medium band, but we have also plenty of cases when the pair don't reach the medium band, like in this case, right? Despite giving us a good 200 pips rally, it didn't reach the medium band. And you know why it didn't reach the medium band to the downside? Because we are in an upside trend, okay? So the idea is that when you are going against the trend, okay, you must send an average limit of pips for your trade. I believe that 100, 120 is the average number of pips we can get if we are moving against trend in forward charts, right? Yet, if we are coming from this upside trend and the general trends remain bullish, and we see a rebound in the downside, in the down band, okay, then this is more probably for the price to reach the medium band, okay? When we are going against the trend, it's not the same that we are going following that trend, okay? The number one through trading foreign trend is your friend, right? Anyway, let me check if you have make any comments. Okay, no comments, no questions, right? So I could continue with this, okay? We can also variate the moving average length. You know what I mean, right? The more exact method to determine the moving average length is by matching it with a reaction low after a bottom. For a bottom to form and downtrend to reverse, a pair needs to form a low that is higher than the previous low. And that's something I do pray to really too much attention when I enter any trade following this kind of bands, right? In this case, the pair reached the down level, okay, and we have a candle opening inside the Bollinger Bands, okay. I usually place my stop a few pips under the previous low, right? In this case, see here? Okay. I usually place my stop previous there. We need a higher low to confirm the trade, right? In the case we are going to sell, we need a previous higher, we need an actual lower high regarding previous one, okay? Sorry, is everything fine? No question. You have different revenue settings for different time frames. Yes, Papa Joel. I do have this different deviations, friends. Not in fact deviations only, but moving average. As I told you at the beginning, I enlarge the moving average. Okay, during if I turn to daily charts, I tend to enlarge this moving average, not only 20 periods. And when I trade smaller time frames, but not GBP, okay, with other pairs. I use the 10 or 12, 13, in fact, 13 periods moving average, right? In 50 minutes or 30 minutes time frame, I choose to use a 13 moving average, right? But the fact is that GBP is one of the currencies that in smaller time frames works worst with relative strength index. Do you know what I mean? The pair could be in 15 minutes or 30-minute charts. Let's place an example, okay? Ignore the bands. See the case here, okay? The pair is way overbought in 50-minute charts, and we have some small correction, but more of lateralization and price continues. Fact is that the pair doesn't correct right when it's oversold or overbought in 15-minute charts. So I don't use Bollinger Bands and relative strength in smaller time frames for GDP. I rather use it, yes, in another pairs like Euro, Canadian dollar, Australian dollar, or Swiss franc, right? I don't like relative strength index in smaller time frames for GBP. I don't work it under 4-hour charts. Okay, and also I plot this 80 level because it gave me more clear, a more accurate signal, right? The pair could reach 70, like in this case, okay? In fact, they work more or less right with Bollinger Bands, and that's what I'm trying to explain here. See what we have here, okay? The Bollinger Bands and relative strength indexes filter each other. That's what I'm looking for, right? Okay, the candle opening under inside the bands after the pair reached the 70-80 zone, stop above previous high and 100 pips target, right? That's what I try to look at in this pair. But the fact is that the pair could surpass this 70 zone, okay? Could reach this 80 level that we saw here. But in this case, we see the price fighting the Bollinger Band and moving above it, okay? So that's why I tend to place my stop a few pips above previous candle's high, right? If you place it above, we enlarge this, okay? Like here, okay? See, we have a candle opening inside and a probable stop above this high here. Again, a candle opening inside, okay? Maybe this one and a stop above this high, okay? That's how I do trade this. But as I told you, any indicators, any combinations you use of indicators is a matter of watching how pair develops and how price reacts to that certain indicator. Okay, in this case, where the bands are stretching to the upside and turning bullish. Okay, the inclination of a moving average is also very important to consider, right? In this case, okay, with such a bullish slope, enter selling trade could be risky, right? Because we know we are in an upside trend, so we are going against trend. We need quite a tight stop loss. That's what I mean. Or wait, really wait, pair reach the 80 level, like in this case, right? If the pair reach the 80 level, correction will surely come more accurate than in case we have 70, okay? But you should take a look at where the slope of the moving average, the center band is. In this case, we have a flat one, so 70 works. In this case, we have a moving average raising, so 71 works. We need an 80 here, okay? That's more or less what I'm trying to explain you when I talk to you about the behavior, okay, of the indicator and the price. And that's something, I don't know, it's not maybe a mathematical theory, but it's my theory. My theory says that most time you spend sitting here watching your charts, more you learn about the behavior, okay? And once you completely learn the behavior of a certain pair in a certain time frame with a certain combination of indicators, that's the time when you're ready to trade, okay? This is a system that works almost in any market conditions, meaning trend or sideways conditions, but as this 4-hour charts, it's not you will have a couple of daily entries, right? It's a system, it's a medium-term system, so you will have signals maybe once, 3 times a week or so, right? So you should combine it with another system for trading the short term. And that's okay. You can have your GBP 4-hour charts in here and another 15-minute charts with another system great for 15 minutes. Not this one, as it does not work as accurate as in bigger time frames, right? Okay, we have some questions. Well, Shaq, how do I know if the real breakout of the upper band and an upper uptrend starts? As I told you, if the relative strength index is under 70, I assume the trend will continue, okay? Relative strength index is quite a momentum indicator for GBP. So if it's under, and we are talking about an upside trend, right? If it's under 70, I assume trend will continue to the upside, okay? If we are in the inverse case, we are in a downside trend, okay? If the indicator is yet above 30, I assume trend will continue falling, okay? Yes, Boyki, charts are suntan today. All MetaTraders have changed, right? We have one more number. We have one more 64.95.6 due to the new way of trading we are having commonly across the world. So I changed my MetaTrader. I can find one with not with not new numbers. So yes, suntan for today for Bollinger Bands. Papa Hoy, yes, I always refer to previous supports and resistance level. The fact is that I do nothing in market without first setting in the 4-hour charts my resistance and support levels. I guess we have already talked about this, and you have the recorded webinar in the past about setting supports and resistance. The fact is that there are many ways to set supports and resistance, but my favorite one is to take a look at 4-hour charts and try to find maximums and minimums congestion zones, right? Those maximums and minimums where demand, equal offer, and prices rebound. Those are the levels I watch, right? That's why I also watch previous highs, okay? I guess that's my favorite way to determine supports and resistance. Previous historical lows or highs, right? In the 4-hour charts, I do that exercise almost in every pair on daily basis. We do also that during the daily Forex webinar at 22:30 GMT daily. Okay, I also use some fever retracement in case they are valid. Okay, Jack, real time. See price got not touched to low band line, but next day can see price touch. What is this problem with Bollinger Bands? Sorry, Jack, I'm not sure if I understand what you're telling. In real times, see price got not touched the low band line, but next sense. Okay. That's okay. I know what you mean. You mean that maybe if you are, I don't know, let's make an example, right? Maybe when you see this candle currently happening, it does not touch the band, right? But next days, when price reach this level, you see that this candle, in fact, really touched the lower side of the band. That's what you mean, Shaq? I hope that's what you mean. And that's why that's sort of what I'm telling you about using indicators and not the same reviewing the past, like seeing what's going on. We are talking about a dynamic indicator. The moving average moves, okay, in daily basis, except when we have this kind of lateralization, and if the moving average moves with prices, so will the deviations, right? And you see that maybe when we reach this level, price didn't touch the bound, But once the price rise, moving average should rise, and so the deviation, and so you find out that. And that's what I'm telling you is not the same backtesting any system in the past that in real time, okay? It's like in this case, okay, you see the price reaching the upper band, okay, and you don't know if it will break, continue accelerating, or rebound to the downside, okay? That's more or less the same I was commenting, right? Because this is a dynamic indicator that moves along with price, so it will change and will change the deviations. Nothing is fixed in market, okay? Nothing is quite fixed. That's why I always tell you to backtest. Backtest is not only backtest and sit here in the chair, watch the charts, and study the behavior. Live. That's what's the real issue here. Spending time studying that, in fact, nobody wants to, but that's the only way to success. That's it. Okay. Over. Yes. What's the exit? Well, as I told you, the theory says that the medium band, okay, the moving average is the exit, right? If you enter to the downside, your target will be here, and the break and here will approach to the lower band. And on the inverse, if we enter a buy signal here, your target will be here, and the confirmation above this moving average will lead you to the next band, right? As we were commenting, when you enter the trade here, your medium band was at 61.90, right? But as it's a dynamic indicator, when it finally reached the medium band, it's 61.50. There are 40 pips difference between the moving average price at the moment you open the trade to the moment you close your trade and the pair finally reach the moving average. That's what I told you, to set an average 100 points limit in this kind of trade. If you are going against trade, like we commented earlier here, okay, 100, 120 should work, okay. If you are going favoring trend, okay, like in this case, maybe a bit more, but in the 4-hour charts for GBP, 100 pips average could be a limit, right? And that's again part of studying the movements, okay, of taking notice that in fact here we have a rebound, the candle opening, we have 170 pips, okay, that's a bit more. And if you take a look at the past, right here, I don't know, maybe 130, okay. So let's see around here, we have no clear signal here. The indicator really was not changing. See the relative strength index flat in this candle, not signaling a probable reversal. So, but if we do enter a trade here, we have barely 30, 40 pips, so, and the stop probably will be touched in this case, okay, failed one. Yet we have a better one here, okay, indicator rising again, and again here, okay, and maybe here again when we enter again, we have a candle opening inside the Bollinger Bands, right? Yes, that's my target, okay, 100 pips, not more. In fact, being me, maybe 80, 90 should work. I don't know what do you think, but about trading, I know I'm not a longer term trader. I do prefer short term trades usually, but if you have 80 pips, it's almost the same than having 100, and why stay and wait? You have more capital, more free for more trading. So I guess I tend to close my trade, say earlier. Besides, as I told you, one thing is the target you set when you enter the trade, like in this case, we were saying, let me find it, okay, like here, okay, you enter the trade maybe around this level, okay, with candle opening, the relative strength index, all favoring the trade. If you choose to put your limit in the moving average, 165 pips, okay, and the fact is that the pair finally accomplished, but the idea is that when the pair reached the moving average, it was some pips under that, okay, but moving average is dynamic, so I don't know, maybe be less greedy and reduce the probable limits for 20 or 30 pips should do the work, right? We don't need those last 20 pips of the rally. We are free to trade another thing. Okay? So that's it. Yes, Oyana, this webinar is recorded. So any more questions? This is the time to place them. If you don't, I guess that's it for today. Once you see the signal on forward charts, what is your process after? After seeing the signal, entered in the market. What do you mean? I don't understand. If I see, like in this case, okay, a candle that surpassed the band, buy a new one, opening inside, I do enter the market here, okay, around this level, place my stop above this limit, okay, above this previous high, sorry, okay, and set a stop on a limit and buy. That's it. I forgot about the trade. Look for another pair, another trade, another thing. That's something we all should consider, okay? When we enter the market, we have to have the whole plan, okay? I have an entry point, and not only the entry point, I do have my 2 exit points, right? My stop and my limit. You can't not enter a trade without knowing where you're going to place your stop or where are you going to enter your limit. They come all together, okay? Entry, stop, and limit come all together. You know, if you have a system and you believe in it and you know the system, you should know when to enter, when you will lose, and when you will win, and how much. So that's what I usually do. Place a trade, put stops, limits, and move on, okay? Sorry. Sorry, I turned off the camera. Yes, I like forward charts. I'm getting more used to trade longer times. Papa Joe, yes, I mean, in short-term charts, this is not quite accurate systems, so we can use another system to trade for short-term in GBP, okay? As these systems will probably, this one will probably give you 2 or 3 times a week, okay? And yes, Harry, I do. And no, this is not for smaller time frames, okay? That's not work so accurate, smaller time frames. Not for GBP. Try to in euro or in Swiss or in Australian dollar, right? In hourly charts, but not for GBP. GBP in smaller time frames doesn't work quite fine with relative strength index, so I don't like it in smaller time frames. For GBP especially, but I like it very much in GBP for forward charts. Tends to be quite accurate, right? So, if you don't have more questions, I guess this is it. I hope to see you all back tonight at 22:30 GMT, okay, in the daily Forex wrap-up. We are always there watching live markets. Thank you, Boyki. I will leave you my messenger address. Okay, you can continue asking me questions there if you like to. I will be connected for the rest of the American session. Yes, exactly, Maud. Thank you. So we will check how things went out at that time, right? So thank you all for being here and hope to see you back soon next month, I believe, with another technical webinar. Thank you. Bye-bye.